place. Do you feel threatened when a Goliath like Morgan Stanley moves into this space?
No, certainly not. I think in terms of the E-Trade transaction, I think that was a question not necessarily of if, but when and who. Even the last time I was on this program following the Charles Schwab and TD Ameritrade acquisition, Stephanie made a great point that E-Trade could be a potential holding just for the M&A potential. And I see, you're seeing that realized here today. And I do think, to your point, Wilfred, this does have some potential implications for the industry. One, I think New York Times said it best. This is a combination of Wall Street coming together with Main Street. Stephanie mentioned there's 8 million total accounts, but the way you get to that 8 million accounts is very, very different. On the E-Trade side, you got 5 million accounts, but $260 billion in total assets. On the Morgan Stanley side of house, you of course have around 3 million, but 2.7 trillion. So very different wealth profile, which in some cases for them can be complementary, but you have many different companies, including Doe. We're going after a different customer entirely. We've been successful with those that have limited to no equity or option trading experience altogether.
How does it affect your business?
Well, wealth management overall is a very attractive industry, but it's really a tale of two cities. On the one hand, you got the traditional brokerage firms and banks. They're losing market share to the tune of hundreds of billions of dollars a year. And there's the other side of the business, which is where we are in, which are the RIAs, the independent fiduciary advisors, who are gaining market share to the tune of hundreds of billions. So in many ways, quite frankly, it's a defensive move, and it's a consolidation move. I'm more skeptical with large corporations owning innovative technology plays because, quite frankly, they usually are not doing very well with it. But no question, these traditional players are losing market share. We are winning, and quite frankly, they have not many other choices but consolidation and cost savings and efficiency.
Is there something that you would have preferred Morgan Stanley to do?
Well, quite frankly, fixing their wealth management model. Yeah, ultimately, there's a reason why the traditional players are losing market share. And it is because...
But they haven't lost share. I mean, the wealth management business has been a huge area of success for Morgan Stanley over the last 3 to 5 years.
It has, but from a market share perspective, yes, they are losing market share to the tune of hundreds of billions every year. In fact, last year, brokerage houses have lost almost 200 billion through assets that were leaving through brokers and they were leaving through clients, and they're coming to our segment. So what could they have done? What should they have done? Ultimately, change the value proposition from selling products, ultimately suitability, to giving best possible advice, which is what the fiduciary advisors are doing.
Not sure, maybe across the industry, I'm not sure that applies to Morgan Stanley, who have almost every quarter increased the assets under management in wealth management. Victor, just wanted to come to you. How easy is it, do you think, for a company like Morgan Stanley to integrate those technologists that we heard from James Gorman and to really make the most on that side of this acquisition?
Well, look, in my former experience at TD Ameritrade, we were known as a serial acquirer. So I've gone through many of these myself, and it does take a significant amount of effort. I think the question is how deeply are they going to integrate these services? I think James Gorman this morning with you, Wilfred, mentioned he's excited about a couple of different areas. The direct consumer integration on the banking side, as well as taking this as an integrated and international platform. And I think that can take a little bit of time. He did mention they respect and hope to keep things business as usual, so to speak, for their trading business, which I think is fine. But I think in this climate where you have fintechs like us who are continually innovating, putting out new, rich experiences as well as new capabilities, I think any time spent integrating is time that we're going to get the opportunity to deliver new services. This week we've been rolling out margin as well as the ability to short stock through our new Doe Premium offering. And I think that's just going to show you the speed with which these firms can innovate, and any 12 to 18 month period is going to be difficult.